What's up guys? So today we're going to be looking at technical analysis for beginners. So if you are a beginner in Forex trading and you want to understand technical analysis, this is the best place to begin. I'm going to give you like the foundation. You see, most of the time we get in and talk of all these important things and the jargons on trading, but we never actually tackle like the basic stuff on technical analysis. When we say technical analysis, what do we mean? Simply, it's looking at the chart right in front of you and using the trend of that chart to try and predict or to try and speculate on where the market will go to in the next few hours, next few days, next few minutes, or wherever. You're basically looking at the chart right in front of you. You're looking at the trend of that chart. You're looking at the patterns of the chart, and you're trying to predict what patterns will likely be formed in the future. So this is one of the basic stuff in Forex trading. And today we're going to be looking at my chart. I'm going to show you a bit of very important stuff when it comes to technical analysis. Welcome guys. Otherwise, here at Kenneth MoneyMatters, talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income. Basically, financial freedom. Let's dive in. So welcome to my screen guys. So look at this. This is just one of the ones I was working on yesterday, but I'm going to talk about that in a few. Let's look at these ones. I'm going to try and delete everything that I have here. So with regards to technical analysis, the most important thing that I want to talk about is support and resistance, and then I'll also talk about trend lines. These two things can help change your trading. They can help modify your trading. These two concepts, these two ideas, these two strategies can help modify or revolutionize your trading journey. And if you don't want to have a difficult trading journey, you need to listen to this video all the way, because I'm going to give you some gem on just what's the most important thing. Number one, when you talk about support and resistance, what are we talking about? Support is basically where the market finds support. Just as simple as that, nothing complicated. When the market is coming down and then there's a turning point, it starts going back up, it has found support. It's like when something was falling from the sky, it reaches the floor, it bounces. It reaches the floor, it bounces. So the floor becomes the support. So support is that particular point that the market has found a support, or the floor in this sense. Of course, the opposite is true when it comes now to the ceiling. The market has found a ceiling. So let's see. Let's say we have something like this. So we have the market is going this way, So if you look at this market, so let's say this is an uptrend market, right? You will find that there's a support down here. So the market came down, found support there. It found support there at some point. It found support there at some point. Now what happens is that the market might not be going in just a clear uptrend like that. It might be going like this. So you will find that at some points you will find that the market has found support in the same areas. So you find that in this area going down like this, the market has found support. And therefore you want to look at a particular place or a particular price reaction point that the market has gone to more than once. All you're trying to determine is what point of the market is the price reacting. When we say price reacting, all we mean is when the prices get to that level, they react and they turn. So when the prices get to a particular place, if it was sellers that were in control, then the buyers will come into the market. And then they will take control and turn the market the other side. So it's basically a fight between buyers and sellers. If you think of it in that sense, it becomes very simple. The buyers and the sellers are always fighting, and you always want to determine where this fight is going to stop and where the other team is going to win. So it's very simple. So if you look at my chart right now, you see that I have lots of drawings here. We have lots of drawings here. But let me just delete all the drawings and then get back. So this is a 1 hour chart. Okay, this is a 1 hour chart. Time frame. You must make sure you know the time frame. If you look at this chart, it's been going up and down, up and down, up and down. But you find that there are certain places that the market gets to, and then it doesn't really go down. It doesn't really pass those levels. It doesn't break those levels. Those are the levels we call support levels. If you go up again, you find places that haven't actually been broken as much. We call them the resistance levels. Now, there's no guarantee in Forex trading that when it gets to that point, it will not go down, or when it gets up there, it will not pass the resistance level. No. what happens is that we are increasing the probability that it wants. But you have to find other confirmations. The more the confirmations, the better that the market would actually reverse at that particular point. The other thing to note with the support and resistance is that it's not just a straight line, but a zone. So let's say we wanted to draw a support area here. So you see this level has been touched more than once. Yeah, it's been touched more than once. You find places that have been touched at least 2 times, at least 2 times. The more, the better, because it tells you how important or how significant that level is in the market. That's another one. You can see it's been touched a number of times, and there's another one. So the other thing, when you're drawing support and resistance, remember it is a zone and not just a straight line. So some people like drawing like a zone, but I find that to make my chart a bit too messy. So I just like the straight line. But one thing I keep in my mind when I'm trading is that at the end of the day, I'm dealing with a zone and not a straight line. So if I say it's here, you can see that this point, so you can see this point down here. I could say that point, that point. So those 3 points have been touched. So yes, it didn't touch it the other time, but you can see the clarity. It's very close to it. So it becomes a zone and not just a straight line. The market does not know or understand your straight lines. So you have to act like you're looking at a zone and not just a straight line. That is something that you have to keep in your brain. And if you like, you can as well draw a zone if you have the tools to. So we can see that the market has found support in those areas. What would we expect when the market comes back to this area? We would expect a bounce back. We would expect that it bounces back. So people would trade what we call a bounce back trade. Or some people would also wait for the market to break those levels and then trade what we call a breakout. A breakout is when now it comes to this level and breaks out completely. How do you know it has broken out completely? People have different theories. Some people say, oh, you have to wait until there's a new candlestick below the zone or the market closes below the zone. But that's never the case. Sometimes it can actually pass that zone, close below the zone, but still come back up. Okay? So for me, the only way to confirm is when there's a retest. So it can break that zone, come back and retest it and use it as a resistance and then continue down. That for me is a clear one. So for instance, you can see this one up here. This one obviously here on Thursday at 4 p.m. It broke that zone. Someone would say it has broken the zone, closed way beyond the zone, but still it came back down. You see? So that is a zone, but you must be sure it came back and went down. So before it retests and continues, I would say be very careful when you're trading. Remember, it's all about probabilities. So support and resistance are very important to your trade. Why? Because they give you the zones that price are reacting. It's called the price reaction areas or the price reaction zones. Draw them well, and you have to plot them in a proper way. Plot them by trying to connect, not forcing, but trying to connect different points that have been touched more than once. Do not force your line. Try to understand the market. Don't force your line to fit the market. The market should fit the line. So we have spoken about support, resistance, and by the way, this is just interchange, because one support could be the next resistance, or one resistance could be the next support when the market goes up. So the market could go up, find a resistance, come back down. It goes up, find a resistance, come back down. But when it breaks that resistance, the next time it comes down, the previous resistance becomes the support level. So they are all interchangeable depending on where the market is going, depending on the trend of the market. Trend lines are basically to show you the trend. They are either ascending or descending. So trend lines are very simple, and they are underused, so you might need to use them more because they can actually give you a very good setup for trades. You can look at this one, for example. This was on the daily. You can see that this trend line tries to connect. Don't force your line to connect the market. Your line should not force the market. Don't force a connection. Just try to connect different points, and if it's not connecting, that's just not a good trend line. So you can see this trend line has connected very important points, and what happened on those trend lines? The market continued going down. So the market was going down, and then you have the minor trend here, which I'm also looking at. I'm thinking, okay, it's forming more like a triangle thing or a wedge. So I'm expecting some reaction, but at the end of the day, I'm still respecting the major direction of the market, which has been on a downtrend. So knowing very well that even right now, as you look at it on Sunday, it gave a sign, and today, Monday morning, when I'm recording this, it seems like it's respecting that trend line and possibly will push down. Now, it's a very simple thing when it comes to trend lines. All you are doing is, when the market is going down, you tend to connect the tops. When the market is going up, you tend to connect the bottoms. This is supposed to give you areas that the market is respecting. These are just support and resistance, but they move with the trend. So they are not straight lines horizontally. These are basically moving with the trend. So they are trying to connect different points of the trend in an ascending or descending order. And they can be very helpful to your trading. As you can see, this first one up here hit this trend line, bearish candlestick down, came back up again, hit this trend line, bearish candlestick down, came back again close to here, bearish candlestick down, came back again up here, bearish candlestick down, came back again up here, bearish candlestick down. Now we are at the same point. What do you expect? What are you looking for? Downward movement at some point. So you have to be in a position to use support and resistance and trend lines to help your trading get better. So that's it for today. I just wanted you to understand the need for support and resistance and trend lines in technical analysis. You don't have to understand everything. You can start with just these two factors of these two strategies and you can trade quite well, as long as you have what we call confluences. You have different confirmations for your trade. You can use support and resistance, you can use trend lines, and you will still trade successfully if you're disciplined and if you know what you're doing. Thank you guys. I hope that has been helpful. If you want some mentorship, one-on-one mentorship with me, remember to reach out to me. Otherwise, see you next time.